Hi there, you're at the Ethereum Wyckoff technical analysis session, and here in the chart we're looking at the weekly chart of Ethereum with the white candles representing price going up, red candles price going down. So here what we can see is over the past 2 weeks the bulls and the bears has been fighting to keep the upward momentum of Ethereum's price. And especially this week, the bulls has tried to push the price back to test the purple key level of 3940, but then the bulls successfully pushed the price back above where the price started. This week. So as of now, looking at the volume, it's very fierce competition between the bulls and the bears for this week and last week, because if we see these long wicks, meaning one side try to push the price to the other side, but then the other end has successfully defended. That's why pushing the candlestick's body back to somewhere between those two long wicks. But this week is a bit funny because the bears has successfully pushed the price a bit lower than last week. So would that be signaling that the amount of people catching or like buying the dip is less than what we had the week before? So now, looking at the Wyckoff stages, previously we asked, are we at buying climax or like the upthrust in the blue scenario? Either case, what would happen next would be some form of adjustment coming down. If it is a blue scenario, that means it would come down for a sign of weakness around the blue key level around 3540. Or if it's the yellow scenario, it still would come down. I just have a different tag in yellow. So it's still a sign of weakness, just that one is phase B, one is phase D. So that's the difference. However, the tendency of it coming down to test these supports hasn't changed. One thing that's important is this channel box, this light blue box over here. This box has started since March this year, and then the price has been traded within this channel. People would say this is like the bear flag of the candlestick analysis, and eventually the price will come outside towards the downside. That matches what the Wyckoff distribution patterns described after a climax, that it will eventually come down for an automatic reaction or a sign of weakness. So that may hold true this time again. However, if we look at the channel squeeze right now, because of the previous leg upward, so this squeeze happened over here back in mid-June to late June or early July. That leg upward has released quite a lot of energy, and now the purple, this staircase-like curve, is way outside of the orange. So it may take a little bit of consolidation or the price to come down before a next squeeze would happen for a crazier price move. So what then if this continue or just to trade sideways? That's totally possible, instead of like coming down immediately. So it may edge along this side and then eventually edges upward. That's option one. But looking at what happened over the past 2 weeks, whenever the price comes to these levels, there seems to be quite some selling going on. So it's not an easy thing to keep continuing and go up to challenge a higher point. Especially this point right now, we are already at similar level as the upthrust back in 2021. So people would become very skeptical about Ethereum's price going further above this peak 4 years back. So that's the psychological barrier. So the likelihood of this heading towards the downside, at least challenging these two supports, the bottom edge of the channel as well as the purple, would be more likely. You can treat that as 60 or like even 70-30. So 70% to the downside and 30-35% horizontal or slightly upwards. So that's the challenge right now for Ethereum. Here, if we go to the daily chart, I'm not meant to open that yet. So daily chart, previously we asked, okay, is the price heading towards upthrust after distribution, after the automatic reaction to over here? That was the upthrust happened back in mid-July, and yeah, it did happen, and the price yesterday closed somewhere near or even above this point as well. So I received a question earlier in the comments saying, what do we call that if there's a higher point than this one? I would consider that just a test, or you can call that UT82, UT83. It doesn't matter to me, because whenever these new peaks happen, they are just a test of market demand. So if the demand continues, there will be more tests around those levels until a point all the demand has been consumed, and eventually the wave will die down and return to some sort of sign of weakness. So the first point may happen around here, and then so it can be something like this, where it finds support around the purple, bounces up a little, and eventually comes down to test both the deeper blue and the light blue levels at around 3,540 as well as 3,200. So those are the possible scenarios and key levels, as well as the Wyckoff stages in the daily time frame. So this is different from the weekly. Weekly is at a different stage. Sometimes they line up, sometimes they don't. So this time in the daily, it's a step or two or a phase or two ahead of the weekly. So both, as of this moment, are kind of pointing towards an adjustment. So don't be surprised if the price really comes down to test somewhere around 3,900 to 4,000. That's very valid possibility, I would say, given looking at the Wyckoff patterns. So even though yesterday's volume bar is pretty impressive, we can't eliminate the fact that after a week of price drop, there were a bit of people trying to buy the dip. That's why pushing the price back up. Hopefully it's not like the whales giving out all their stock of Ethereum in their hands to the guys who FOMO in. That would be very tragic when the price comes down. So be careful. Remember to set your stop loss if you have entered and catching the wave, because it is a really risky price level now, as well as looking at the patterns both weekly and daily, that price adjustment seems to be brewing. So finger crossed if you have orders active right now.